Welcome to episode 1 of Hot Markets. In episode 1, we'll be taking a look at NVIDIA because they have secured the bag in AI hardware for the next 5+ years. But what does that mean for the stock? Looking at the chart, NVIDIA stock is up 158% from this time last year and up about 200% year to date and doesn't appear to be slowing down as it has remained above the $1 trillion valuation mark for almost 2 weeks. NVIDIA has two huge competitive advantages. Those are their current state-of-the-art products, the H100, HGX H100, and Grace Superchip, as well as their company culture and pace of innovation. Let me use some graphs to demonstrate NVIDIA's lead in accelerated computing. So looking at the graphs, you can see NVIDIA's H100 versus their predecessor product, the A100, clearly blowing it out of the water. Google, who is making large investments to match NVIDIA's tech in this space, created a V4 TPU to compete with NVIDIA's A100 and H100. However, in all of their comparisons, they compare it to the A100, and it is only 1.9 times faster than the A100, which is completely destroyed by the H100. Taking a closer look, large inference models are particularly heavily impacted, with NVIDIA boasting 30 times better inference power in the H100 than its predecessor. Now, this has trillions of dollars worth of implications. We're not talking about 1 or 2 trillions of dollars. We're talking about 10, 15, 20, 30 trillion dollars because we're talking about revolutionizing a whole bunch of different industries like automotive, finance, manufacturing, and many, many more spaces with massive financial implications, let alone the ones that we don't even know will be disrupted yet by AI. Now moving on to their second advantage, their culture and pace of innovation. This image took NVIDIA, after decades of research, just under a few hours to render hyper-realistically. Then 6 years ago, they were able to do it in under 15 seconds. And now, with a device the size of a tablet, they can do it in real time. Now, while this industry doesn't have particularly large implications financially, it does show NVIDIA's dominance in the GPU space, as well as their culture of innovation, which I talked about before, and that is a large contributing factor in any giant tech company's ability to retain their lead in their space. Now, circling back to NVIDIA's current product advantage, let me play a clip from Computex 2023.
Accelerated computing and generative AI. This way of doing software, this way of doing computation, is a reinvention from the ground up, and it's not easy. Accelerated computing is a full stack problem. It's not as easy as general purpose computing. The CPU is a miracle. High-level programming languages, great compilers, almost anybody could write reasonably good programs because the CPU is so flexible. However, its ability to continue to scale and performance has ended, and we need a new approach. Accelerated computing is full stack. You have to re-engineer everything from the top down and from the bottom up, from the chip to the system software, new algorithms, and of course, optimizing the applications. The second is that it's a data center scale problem. And the reason why it's a data center scale problem is today, the data center is the computer. Unlike the past when your PC was a computer or the phone was a computer, today your data center is the computer. The application runs across the entire data center. And therefore, it's vital that you have to understand how to optimize the chips, the compute, the software across the NIC, the switch, all the way to the other end in a distributed computing way. And the third, accelerated computing is multi-domain. It's domain specific. The algorithms and the software stacks that you create for computational biology and the software stack you create for computational fluid dynamics are fundamentally different. Each one of these domains of science need their own stack, which is the reason why accelerated computing has taken us nearly 3 decades to accomplish.
All right, sorry if you got bored watching that clip, but every word that Jensen Huang said was so unbelievably critical. NVIDIA is going for the AI jugular. They're attempting to capture every AI application in one hardware stack, and they're doing it successfully. That feat took NVIDIA 3 decades to accomplish with full hands on deck. What this means for the future is that NVIDIA's engineers have far more experience than any of their competitors. In fact, probably all of their competitors combined in the AI innovating space. The lead NVIDIA has accumulated in hardware, matched with their untouchable amount of experience in AI hardware, will make them untouchable for the next decade to come. But what does that mean financially for the company? So let's get into the juicy bit, the money. Looking here, you can see NVIDIA estimates an increase in quarterly revenue from $7.192 billion to $11 billion in just the next quarter, a 53% increase. This can be attributed to an extraordinary increase in demand for data centers. Based on NVIDIA's increased Q2 revenue estimates, I expect NVIDIA to do a little over $7 billion in data center revenue in the next quarter, which is a 66% increase. I expect a similar but slightly slower increase, let's call it 50%, from the following 3 quarters as they continue to maximize production of their new products, H100, HGX, H100, and Grace Superchip. This would result in approximately $24 billion in data center revenue in 1 quarter by the end of 2023. I also strongly believe that over this time frame they will increase margins because of some things that Elon Musk said in a recent interview with the Wall Street Journal. Let's have a look.
To train a model of probably GPT-5 size, I wouldn't be surprised if they use at least 30,000, maybe 50,000 H100s, which are the latest GPUs. Is not quite the right word, but the latest technology from NVIDIA. And then you need to run inference as well. So it's a lot of the GPUs are at this point considerably harder to get than drugs. Actually, that's really not a high bar in San Francisco.
All right, now for those who didn't quickly do the math, Elon Musk is suggesting that to train GPT-5, OpenAI will need to purchase 40,000-ish GPUs from NVIDIA. At $400,000 a pop, that would be $16 billion in hardware for one company for one project. That is mind-blowing. And large language models are not the hardest AI problem that is being attempted to be solved. Let's think about solving autonomy. Tesla is going to need far more than 40,000 of the H100 GPUs to solve autonomy, as well as Google for their autonomous platforms, as well as GM and Ford for their cruise technology. Without a doubt, there will be tremendous international competition to obtain these GPUs, giving NVIDIA extraordinary pricing power. So, increased quarterly revenue to $24 billion with increased gross margins to 80% results in $19.2 billion in quarterly profit in Q4 fiscal year 2024. This would result in an annualized rate of $96 billion in revenue and $76.8 billion in profit. This company will be printing money faster than the United States government, without a doubt in my mind. The company will continue to grow after that as the applications for H100 grow and they further maximize production. If NVIDIA maintains a compound annual growth rate of 35% in data centers after this year, they will achieve an annualized rate of $236 billion in revenue and $165 billion in profit by the end of 2026. And that is assuming that their profit margins decrease back to around current levels of 70%. This means that 2026 EPS, in my case for NVIDIA, is $66.8 per share, and trading at the current price to earnings ratio of the S&P 500, 25.62, that would make the stock worth $1,711, and trading at the current multiples of NVIDIA, it would be about $3,400. That's it for today's video. In episode 2, we'll be discussing what makes Apple the world's most valuable company. Peace!